3 weeks ago, I noticed something in a dataset that I almost scrolled past. A number on the Shanghai Futures Exchange Vault report had changed, not by a little, by a lot. So I opened a spreadsheet and started tracking it day by day, then week by week. What I found pulled me into a rabbit hole I haven't escaped since. If you own physical silver, hold mining stocks, or watch the price crash wondering if you made a mistake. This video will answer that question. I'm going to walk you through exactly what I discovered, in the order I found it. Around the 12-minute mark, you'll hit a piece of information that makes you pause and rewind. I know, because that's exactly what happened to me. It started with one chart. Welcome to Smart Finance. If this analysis reveals something the mainstream missed, hit like and subscribe. It helps the algorithm show this to the people who need to see it. The Shanghai Futures Exchange, SHFE, publishes its vault inventory data. This isn't opinion, analysis, or internet guessing. These are audited, daily updated numbers. Real bars and real vaults. I pulled the time series from CEIC, one of the world's most respected economic data platforms. In mid-December 2025, the SHFE reported 900 tons of physical silver. On February 4th, 2026, that number was 423 tons. I refreshed the page, same number. Previous day, 449 tons. Day before, 462 tons. Every single day going back, the number was smaller than the day before. 6 weeks of data, not one single day of increase. This isn't fluctuation or seasonality. This is a one-way door. Silver is leaving the vaults and not returning. Let the scale sink in. 900 tons down to 423 tons in just 7 weeks. That SA 54% drawdown. More than half of China, Gurgas main exchange, silver gone in under 2 months. The weekly drain rate is 42.6 tons. Daily drain is Termonor's 10.8 tons. The decline isn't flattening, it's steepening. The drain is accelerating. Combine SHFE with Shanghai Gold Exchange Vaults, roughly 900 tons total Chinese exchange silver. That equals about 29 million ounces. Global annual consumption is over 1.2 billion ounces. China S visible stock covers just 2.4% of 1 year S demand. That isn't a buffer, that's fumes. No article I read did this next step, so I will. Current inventory, Termonor's 412 tons, drain rate C, 142 tons week. 412, 42, 9.8 weeks. Call it 10 weeks. In 10 weeks, at the current pace, SHFE silver vaults reach zero. Not low, not concerning. Empty. Nothing left to deliver against futures contracts. If you hold physical silver or miners and just endured a 53% price crash, understand what this means. The exchange behind much of Asian silver price discovery is running out of metal. I'm not saying it will definitely hit zero. Rates can change, metal can return, but almost no mainstream outlet is even running this simple math. Here's where the story took an unexpected turn. I wondered, is this just a China industrial story? Solar panels, electronics? China is the world's largest industrial silver consumer, after all. Then I checked COMEX data. My stomach dropped. COMEX silver inventory fell to 415 million ounces in late January 2026, lowest since March 2025. That's a 34 million ounce drop from recent peak. Even more telling, registered deliverable silver has seen major outflows since September 2025. Eligible metal is simply being reclassified to registered to meet delivery demands. No new metal is arriving. They're just shuffling what's already there. It's like a restaurant renaming appetizers as entrees when the kitchen is empty. So it's not just China. COMEX is draining too. 2 of the 3 largest visible silver inventories are losing metal simultaneously. I didn't want to look at the third, but I did. London Bullion Market Association, LBMA, free float, silver available for unallocated accounts, has collapsed to levels described as the lowest in modern history. For the first time ever, Shanghai, COMEX, and London are all draining at record speed. Nearly 1 billion ounces of refined silver have disappeared from visible stocks since 2021. Shanghai draining, COMEX draining, London draining. Same metal, same direction, same time. There is no historical precedent for this. If this were oil or copper, it would dominate financial headlines worldwide. Because it's silver, you're hearing it here instead of the Wall Street Journal. The obvious question kept me up until 3 a.m. Who is taking the metal? Silver doesn't evaporate. Someone is signing for it, transporting it, storing it. On January 7th, 2026, COMEX saw 8.1 million ounces delivered in one day. JP Morgan supplied 99% of it. One bank, 8 million ounces, one day. After that huge delivery, open interest didn't fall. It rose. New buyers piled in as fast as old ones were filled. Traders were even rolling contracts backward, paying extra to take delivery sooner. They don't trust the metal will still be there if they wait. On January 1st, 2026, China's Ministry of Commerce imposed new silver export controls. Silver was officially reclassified as a strategic material, same category as rare earths. Only 44 large, state-approved companies can now export. This move effectively keeps 60-70% of global refined silver inside China. Within days, Chinese buyers offered $8, $10 per ounce above market to foreign miners. That's how you know the restriction is real. China didn't ban exports. It created a licensing bottleneck so tight most silver is now landlocked domestically. Mapping vault data against policy dates revealed a pattern. October 2025. From 190 tons in combined SHFE, SGE vaults. By November 21st, just 51 days later, only 519 tons remained. On November 21st alone, another 15,819 kilon left, while the price was falling, not rising. That's not speculation, that's strategic accumulation. December brought a surprise 129-ton inflow, highest in 17 months. Some thought the drain was over. It wasn't. By mid-January, the outflow resumed, harder than before, and continues today. By interpretation, connecting dots, not proven fact, China briefly restocked in December, right before the January 1st export controls. Then the door closed, and metal started moving inside China from public vaults to private hands. While this happened, China's only public silver futures fund was suspended, cutting retail Chinese investors off from silver exposure. Export controls, vault drains, fund lockouts, Western price crash. Coincidence or coordinated? In 2005, China quietly stockpiled copper. Vaults drained, prices stayed low. 18 months later, the world realized China had built massive strategic reserves. Copper didn't double, it tripled. By then, the metal was gone and the price reflected reality. The silver pattern in 2026 looks almost identical, but the stakes are far higher. Silver is now a U.S. critical mineral, discussed for global price floors, and in April 2026, about to be remonetized by India. The first major silver remonetization since the 1800s, 1.4 billion people gain monetary access. Chinese vaults near empty the same week India declares silver money. I didn't force those dates. They simply align. This isn't just inventory news. It's a once-in-a-generation shift in who holds silver, in what form, and under whose rules. The paper price you see on screen is backed by vaults running dry. SHFE nearing zero. COMEX registered bleeding. LBMA free float at historic lows. When physical metal runs out, paper price becomes fiction. Fictions collapse on delivery notices. The real question isn't, where's the price this week? It's, what happens to price discovery when the vaults are empty? That moment is 10 weeks away on the SHFE side alone. Mainstream finance isn't even discussing it. When the last bar leaves the vault, price shifts from what paper can bear to whatever it takes to pry the last ounce from private hands. Shanghai, 412 tons and falling. COMEX bleeding since September. London at modern history lows. 6-year structural deficit continues. The world's largest refiner just locked the exit. If you were a government, sovereign fund, or state conglomerate, and you knew silver's strategic status plus had just secured 60-70% of global refined supply inside your borders, would you be selling? Or quietly taking every bar you could while the paper price stays low? Silver isn't crashing because nobody wants it. It's crashing because someone wants all of it, before the rules change. If you held through this crash, you're not wrong. You're early. The vaults publish the truth every day. And every day the number gets smaller. In the next video, I'll show what happens when vaults near zero and paper meets physical reality. I'll keep tracking every report and delivery notice. 10 weeks. The clock is running. This is not financial advice. This is what the data shows. What you do with it is your decision.